What's your reaction? Flexibility, the BOJ says.
Yes, basically BOJ keeps the monetary policy as it is. Because cap on the 10-year bond yields remains at 0.5%, but at the same time BOJ takes a little bit adjustment to the yield curve control conduct because they are concerned about the possible deterioration in the functioning on the bond market going forward. But my sense is that the hidden motivation for the BOJ, most importantly, is the exchange rate, because the too stringent conduct of the yield curve control could invite undesirable weakening yen going forward, and therefore ultimately the criticism against the BOJ, just like last year, as the BOJ doesn't want to repeat the same mistake just like last year. So I think the BOJ is much more flexible this year in terms of the conduct of yield curve control to mitigate any possible wrong message to the currency market.
So are we a step closer to policy normalization or not?
This is not the first step toward policy normalization because the BOJ is still cautious about the sustainability of the 2% inflation going forward. Although we are observing a little bit higher inflation than we previously thought, the BOJ felt the same way. But at the same time, BOJ reiterated that they have to be patient until they can be much more confident about sustainability of 2% wage price spiral going forward. And this is not a time for the BOJ to send any message that this is the first step toward normalization. I think the press conference by Mr. Ueda, Governor Ueda, this afternoon will be very, very important how he conveys the message associated with the conduct of the yield curve control going forward and how to characterize any change today. I think that will be very, very important.
Yeah, they haven't really changed their forecast either, but what does adjustment of yield curve control mean? Let's bring in also our colleague, our global economics and policy editor, Kathleen Hayes. Kathleen.
Kazuo, why are they doing this now? Why at this meeting? What is shifted that they are? Is this the first step towards actually doing a bigger shift? Or are you in the camp that says, oh no, they've made this little tweak and now they'll wait to the first half or so of next year? I just still don't understand why this is being done now.
Well, I would characterize this as a mini tweak, not tweak. Not the first step toward the much bigger picture of normalization of monetary policy. The motivation for the BOJ to do it now is, as I mentioned earlier, exchange rate, because the exchange rate weakened for several weeks before this meeting. So I think there is some risk that the yen could further weaken during the summer. Particularly summer is a very volatile season for the exchange rate market. So BOJ should be, probably think that BOJ should be prepared for any adverse development in the exchange rate market. So this message of some flexibility toward yield curve control could help BOJ avoid that kind of undesirable movement in the exchange rate.
Is it possible that another thing they're a little bit concerned about is that the Fed is opening the door wide to more rate hikes? They said they can go either way, but is that something that does concern them? That if the ECB hops on board too, that this is something that could unsettle the exchange rate, unsettle the bond market, and they want to head that off at the pass?
Well, Fed decision this week didn't directly affect the BOJ decision today. As a matter of fact, any messages coming from Fed is a little bit more dovish tone than previously because the CPI inflation number is quite favorable recently. But at the same time, it is also true that there's no end in sight about the tightening cycle of the Federal Reserve. So I think there is some chance of the market of shift in the mentality toward more more hawkish tone of the Federal Reserve expectation, and therefore higher interest rate pressure. So I think that there is any chance for the BOJ to face the possibility of the deterioration of the functioning of the GDP yield, and more importantly, as I mentioned, weakening currency pressure will be undesirable for the BOJ at this moment, because the actually Ministry of Finance official several weeks ago, he said that he would be doing anything to combat against the further currency weakening. When the official of the Ministry of Finance says that, it would be probably wise for the BOJ to do anything about the yield curve control to mitigate the currency pressure going forward.
Kazuo-san, I mean, I'm just reading this. The Bank of Japan is going to continue to offer to buy, will continue to offer to buy 10-year JGBs every day through fixed-rate purchases, but at 1%. That changes things, doesn't it? That's a wider band, surely.
Well, band. Changing the band is sending much more clearer message that BOJ might be stepping towards the normalization of monetary policy, but that's the last thing BOJ wants to do now, because the BOJ still be cautious about the sustainability of the 2% inflation. They want to be they want to wait for more data to confirming the sustainability of inflation. So I think probably the most important thing the BOJ has to do today after the under the Mr. Ueda's conference is that he should convey this is not the first step toward normalization. This is not even the adjustment to the yield curve control. This is just a technical mini tweak of the conduct of the yield curve control. That kind of communication will be probably very important for the BOJ today.